Philippine Finance Secretary Carlos Dominguez was not surprised by the slowdown in economic growth in the second quarter, given the delayed passage of the 2019 national budget and the election ban on new infrastructure projects. As leader of the Duterte administration's economic management team, Dominguez is now leading government's push to catch up on spending and infrastructure construction, which he remains hopeful will bump economic growth back above 6% for the year. But BPI lead economist June Neri says government spending may not be enough.
We're not sure with this bad weather whether they will be able to continue with the road projects and projects that rely on dry weather. No? So if these are delayed and the funds of the Bureau of Treasury are all parked with the Bangko Sentral, then the money will not be circulating in the system for corporations and individuals to benefit from. No? In the meantime, I think it makes sense for an accelerated reduction of the reserve requirement until such time that the national government has clearly returned to normal expenditure behavior.
Neri has long been advocating for the Philippine Central Bank to further cut banks' reserve ratio requirements to allow more money into the economy in support of business and consumption. The central bank cut key interest rates by 25 basis points Thursday, but it did not touch RRR rates after reducing those by a total of 200 basis points during the second quarter. Meanwhile, debt watchers remain confident in the Philippine economy's ability to rebound from slowing growth. Moody's Investor Service has kept its stable outlook for the Philippines despite slowing economic activity, as it expects government's infrastructure push to help boost the economy. Fitch also expects the Philippines' economic growth to recover, but it believes the Bangko Sentral has yet to join the fight in terms of stimulating expansion.
Just looking at the recent weakness in the GDP data and the fact that inflation rates have fallen, we don't think that the central bank's policy at the moment has become pro-growth, but we will continuously keep looking at the steps that the central bank takes. But for the moment, we think that the moves that the central bank has taken are broadly in line with their mandate.
Philippine GDP grew at 5.5% in the second quarter, its slowest pace in 4 years. In the meantime, the Duterte administration is working to avoid a repeat of the delayed passage of the 2019 national budget. President Rodrigo Duterte approved the proposed 4.1 trillion peso budget for 2020, and the administration is now calling on lawmakers to pass it as soon as possible. Warren de Guzman, ABS-CBN News.